Thanks for clicking. Pent-up demand for housing is growing, and when the massive pool of millennial homebuyers decide it's time to get into the real estate market, Canada's real estate crisis could be worse than ever. This was the message coming from a Toronto Star article posted on Saturday. The article speaks with the usual suspects, Phil Soper, CEO of Royallepage, and Sean Cathcart, senior economist with the Canadian Real Estate Association, who paint the picture of a horde of millennial homebuyers eagerly waiting on the sidelines, ready to enter the real estate market en masse when the moment is right.
We must act now.
But what does the data actually tell us? Are there thousands of millennials waiting on the sidelines, waiting for interest rates to drop, at which time they'll enter the market, sending prices soaring upwards? So what I want to do today is go over the article, taking a look at what these experts have to say about Canada's growing pent-up demand, take a look at what the data actually says, and then discuss what to look for next. Speaking of next, Canada's real estate data for the month of January is set to be released any day now, and we'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this article. On to the article. As mentioned, CEO of Royallepage, Phil Soper, continued his narrative of buyers just sitting on the sidelines waiting to get into the market, noting that there is a huge cohort of millennials who stayed in school longer, lived with their parents, and now want to buy a home once interest rates drop. According to Soper, this millennial generation, the largest in history, has yet to be unleashed on the Canadian real estate market. And once interest rates fall, the housing crisis is going to be bigger than ever.
I am calling a realtor right now.
And this point was echoed by Sean Cathcart, senior economist at the CREA, who said that it's not just millennials waiting to get into the market, but also Gen Z, moving into their 30s, who are also waiting on the sidelines to get into the housing market. And these notions that there's a massive group of non-homeowners who are just eagerly waiting on the sidelines, eagerly waiting for prices to bottom or for interest rates to drop, is echoed on an almost monthly basis by the Canadian Real Estate Association, who, month after month, has talked about the buyers just waiting on the sidelines, ready to jump back in.
They're on their way. They're gonna be amazing.
Yet it's not exactly clear that this narrative matches reality. In December of 2022, there was a report published by GenSqueeze, authored in part by Dr. Paul Kershaw of the University of British Columbia, which found that it was rising prices and the subsequent required down payments and income that were restricting millennials from entering the real estate market. The report found that in order for the average millennial to enter the real estate market, prices would have to either A, fall by $530,000, or B, the average millennial would have to make $137,000 per year, or C, millennials would have to wait 22 years to save for a down payment.
Don't say we didn't warn you.
So while Soper says that millennials are waiting on the sidelines and don't want to dip their toe into a high interest rate environment, the report found that there's actually an inverse correlation between millennial affordability and interest rates. As interest rates fall, the amount of down payment and income needed to get into the market rises as a result of soaring prices. So it's not clear that millennials are waiting on the sidelines for interest rates to fall. It looks, from this report, as though they've been priced out. With that said, if millennials are waiting on the sidelines, as 2023 Phil Soper says they are, then they should talk to 2021 Phil Soper, who noted at the time that millennials flooding into the market were largely responsible for pushing up the price of houses. In fact, at that time, in February of 2021, Royallepage was noting that millennials, those aged between 25 and 35, nearly half of them already owned their home. Fast forward to late 2022, and a Royallepage survey found that 57% of millennials owned their home by then. So, according to Royallepage, 57% of millennials already own their own home, but the other 43% that have been priced out of the market and will be so again once interest rates drop, it must be them that are waiting on the sidelines to get into the market to re-prop up prices. So, in summary, Royallepage, Phil Soper, the CREA, all painting a picture of a number of millennials waiting on the sidelines, a lot of millennials waiting on the sidelines, ready to enter into the market once interest rates drop. But that's not exactly borne out by the data. Data that shows that A, more than half of millennials already own their own homes, and B, there's an inverse correlation between low interest rates and affordability for millennials, in that the lower interest rates go, the more unaffordable homes become as a result of higher prices. With that said, all of this isn't just to poke holes at the arguments being put forward by some in the real estate industry, though that's definitely part of it, but rather to demonstrate that there is in fact nuance involved. that the data doesn't support the idea that there is a horde of millennials ready to enter into the market the minute interest rates drop. But I think the assertions that we hear so much coming from the real estate industry that there are thousands upon thousands of would-be buyers waiting on the sidelines that are going to rush in the minute that moment hits, the minute that right moment hits, that they're going to rush in and prices are shooting right back up to 2022 levels, early 2022 levels when we were at our peak. It's just not borne out by the data. With that said, we'll obviously continue to track Canada's real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.